So in today's class, I'm going to be talking about order block. In today's class, I'm going to be talking about order blocks. I'm going to be laying more emphasis on order blocks and supply zones, demand zones, order blocks. So that's what I'm going to be talking about today, how to use them effectively and how to know the particular order block that is going to hold whenever you're looking out for any trade, how to know the best order block to take your trade off of, and the best supply zones or demand zones to actually take your trade off of. Yeah. So let's jump right into that. So for some of you that joined the group not quite long, the PDF is already the PDF is already pinned in the group. You guys can check the pinned messages. You guys can check the pinned messages on the group. The PDF is pinned there for you guys to all download. The PDF is basically an ebook on the strategy I use to trade, how I trade, the principles on analyzing the market and looking for possible trade setups. So it's just basically how I trade basically. So yeah. So let's start this section. So we're going to be talking about order blocks. The order block that's most likely to hold when wanting to trade the market, the order block that is most likely to hold, and the supply zone demand zone that is most likely to hold. So like you guys know, supply and demand levels are key levels in the market. Supply and demand are key levels in the market where price definitely reverse from supply levels. Demand levels are key levels in the market where price is most likely to reverse from. So whenever you're trading supply and demand, you just know that okay, whenever price gets to this particular area, the market is most likely to reverse. Supply levels and demand levels are key levels where market is most likely to reverse. So this brings me to order block. Another block is actually the last bullish candlestick or last bearish candlestick. Whichever way you are trading the market, so if you are trading the market to the upside, another block is the last bearish candlestick, causing a break of structure with an impulse move all the way to the upside. So another block is the last bearish or bullish candlestick, causing an impulse move to the anticipated direction and also causing a break of structure. So whenever you want to we take our trade off of a certain order block or a certain demand zone or a supply zone. So another block is the last bearish candlestick or bullish candlestick that caused a break of structure with a massive push all the way to that particular direction. So this is where supply and demand comes in. Whenever you're trading supply and demand are located levels, key levels where price is more likely to reverse from. So whenever you spot out a certain demand or a certain supply zone, you are likely going to look for the order block there at that particular demand zone or supply zone. So whenever we know that okay, we've literally identified our supply zones in the market or our demand zones that we are most likely to trade off of, this is when you come down to probably a lower time frame or another time frame to actually look for other blocks on that particular supply zone or that particular demand zone. I'm going to explain. Market is ranging all the way to the upside, making series of higher highs, higher lows. higher load. Our other block is the last bearish candlestick, causing the impulse move all the way to the upside, breaking the structure, the recent structure. So this particular zone here is our demand zone. This particular zone here is our demand zone. So all you have to do is which is actually the last bearish candlestick that caused the whole move, the impulse move all the way to the upside. It might not be the last bearish candlestick might not be around this area. It might be around this area, but not particularly this demand zone. The last bearish candlestick might probably be somewhere around there. Maybe this should be like bullish candlestick. The last bearish candlestick might probably be somewhere around there. This is where you go to look for your other blocks. Always look for the last bearish candlestick causing the whole move all the way to the impulsive move all the way to the upside. So knowing that this particular this particular demand zone is what caused the break of this structure, and the other block might not be around this demand zone. Probably the last bearish candlestick is not actually this demand zone, it's actually slightly above the demand zone. This is where you go, you mark the candlestick, then look for further confluences like your clear break of structure inducement and everything. Then if it tallies with your demand zone, where your demand zone is sitting, and where your other block is sitting, if all your confluence, all your confirmations tallies around that particular order block or tallies around that particular demand zone, that is where you need to make a decision of, okay, I'm going to trade off of the demand zone. Probably the order block is going to be violated. So the key thing is actually making your analysis. Um, like I said, making your analysis, after making your analysis, then you look for confluences. After making your analysis, then you look for confluences that tallies with how you place your trade and how you take your entries, either from a certain order block or from a certain demand zone. So let me give you guys like a live chart scenario. Let me give you guys a live chart. Okay, here's the chart on Euro NZD. I don't know if you guys can see it. Here's the chart on Euro NZD. Let me show you guys how this thing works. This is the 2-hour time frame on Euro. This is the 2-hour time frame on Euro NZD. Price has been ranging all the way to the downside, making series of lower lows and lower highs. So price came all the way to this up, all the way to this resistance or supply zone. Price came all the way to this resistance, broke the resistance, they'll know that, okay, the market is literally wanting to come all the way, to go all the way to the upside. So price started making series of highs, highs. Then what did we see here? We saw that here was the overall low that was created, breaking this particular highs. So price rallied all the way to the upside, came back down again, broke the low. Price came back down again, broke the low. Then we know that, okay, the market structure literally changed again. So what do? You start looking for sellable opportunities or sell opportunities. So this is where it gets tricky. How to spot out your order block, supply zones, or demand zone to get. So this was actually a zone. This was a zone causing this break of structure. Let me mark it out for you guys. This was a structural low that was broken. Price went all the way to the upside. That was a structural low that was broken. Price went all the way to the upside, mitigated. Structural low that was broken. Price went all the way to the upside, mitigated on the low. mitigated on the supply zone, came all the way to the downside, causing this break of structure and causing this overall break of structure here. Like you guys know, you guys, people that trade other blocks will definitely want to take their trade off of this particular area. This is another block. This is where it gets trickish, or the market tries to trick you in entering from a certain other block or a certain zone that is literally not valid. This is another block. This is another block that caused the break of the structure and caused the break of this overall low here. So when price rallied all the way to the upside, here was an inducement. This was an inducement. Price rallied all the way to the upside, mitigated on the other block. Price rallied all the way to the upside, cleared out this particular inducement, cleared out this inducement, mitigated on the other block. Price mitigated on the other block, came all the way to the downside, then rallied all the way to the upside again to hit stop loss. Let me show you guys. For those of you that trade, this is where trading off of um trading off of other blocks. So you guys can see price rallied all the way to the upside, cleared out an inducement, mitigated, started coming all the way to the downside, and a massive push all the way to the upside to cause stop on massive push all the way to the upside to cause stop on. So a lot of traders have been stopped out from this particular trade because of the fact that they took the trade from this particular order block. But the other block is literally very valid. I didn't say it wasn't valid. The other block was literally very valid. If I put out my Fibonacci retracement soon, I don't know if you guys can see if I plot out my Fibonacci retracement to actually know the perfect zone I'm going to be trading the market off of. You guys can see my 90.50% is at around this particular top. Is at around that particular area. So personally, I'm most likely not to take my trade off of this particular order block rather than wait for the overall supply zone, above. Probably wait for the overall supply zone above to take my trade. So there are cases where, like I told you, there are cases where supply zones, you would have a certain supply zone at a certain area, and the other block won't sit at the particular supply zone. The other block will be slightly beneath the supply zone or slightly above the demand zone, however the case may be. So you literally want to always know the perfect place to place your trade. This is why add more other than what's it called? Added confluence is literally very, very important. So whenever you want to take a trade off of a certain order block or a certain supply zone or a certain demand zone, added confluence is very, very important because other block fails. Some other blocks are not valid. Some other block mitigates and it fails. And a certain supply zone or a certain demand zone is sitting at around that particular order block, maybe above the other block or beneath the other block. So you definitely want to know the perfect spot to take your trade off of. This is one example. Let me go to another. Let me go to another example. It is on Euro JPY. I'm not going to be doing much talk on this Euro JPY. Euro JPY, you guys can see structure above, price literally broke this particular low. So stating that the market has started coming all the way to the started reversing all the way to the downside. So what did we see here? We saw the supply zone being mitigated. So a supply zone being mitigated, the price causing a break of structure, price causing this break of structure. Price went to the upside again, came all the way to the downside. So this zone was what caused the overall break of structure here. This particular supply zone, this particular supply zone was what caused the overall break of structure. The overall push all the way to the downside that caused the break of structure. And if you scale all the way to the 1 hour time frame, if you come down all the way to the 1 hour time frame, you can see that price did a liquidity sweep here, a buy side liquidity sweep that happened here. Here's our zone. Here's our supply zone. Price posting a break of structure. Buy side liquidity sweep. Price posting a break of structure. Then what did the market do? The market came all the way to the zone, came all the way to the zone, then rallied all the way to the downside. The market came all the way to the zone, then rallied all the way to the downside. Rallied all the way to the downside, you guys can see. So the next thing we want to look out for, our recent supply zone to take our trade off of. So this supply zone was what caused the break of structure. So we're likely going to take our trade off of that particular supply zone. But I want to tell you guys something here. Yes, this was the supply zone. But most definitely, this supply zone right now, this supply zone right now is literally very, very perfect because the order book is sitting at the supply zone. Like I told you guys, there are some analysis where your order block will not sit at your zone, will sit most definitely above or beneath your zone. For this particular analysis here, the order block was sitting at around the supply zone. Here was the order block. This was the order block, the last bearish candlestick causing the push all the way to the downside. Causing the push all the way to the downside, causing the break of structure. The last bearish candlestick, since it was sell. Sorry, the last bullish candlestick causing the massive push all the way to the downside. So this other block, this other block is literally very, very valid. It's literally very, very valid because it was the last bullish candlestick that caused the push all the way to the downside, causing an overall break of structure. So this other block is very, very valid for you to take a trade off of. Like you can see, this other block is sitting at the supply zone. Other than this analysis we did, this particular order block is sitting slightly below. It is sitting slightly below the supply zone. But on EuroJPY, but on EuroJPY, the order block is sitting at the zone, the supply zone. The order block is sitting at the supply zone. So this is a good analysis for a massive sell all the way to the downside because the price has mitigated already. Good analysis for massive sell all the way to the downside. So let's look for other examples. Let me look for other examples to show you guys. Okay, so let's look at Euro USD. Let's look at Euro USD. From my observation, Euro USD has been ranging all the way to the downside from the 2-hour time frame. So it states that the market is literally in a downtrend. So what happened? We saw an order block being mitigated here. Note, this wasn't the supply zone. This wasn't the supply zone. This was an order block that was mitigated. Then price came all the way to the downside, rallied, then finally broke the structure. Rallied, then finally broke the structure. So now we're looking for We are looking for the best place to take our trade off of to sell from, either our order block or a supply zone. So if we find our order block sitting on our supply zone, it's going to be very good. But if we find our order block sitting beneath the supply zone, that's where we go for an added confluence, probably plot out of Fibonacci retracement tool to know the particular spot we want to take that trade off of. So analysis has been made. Inducement. Then now we're looking for the order block we're going to take our trade off of, which is like the supply zone. So this was the last bullish candlestick, causing the push all the way to the downside, causing the break, overall break of structure. So we're most likely to look out for this other block. We're most likely to look out for this other block because this other block caused the push all the way to the downside, causing the break, causing the break of structure. For more added confluence, you guys can see that the other block is sitting at the supply zone. This supply zone was mitigated. It has been used. This supply zone that mitigated this supply zone is now the new supply zone, and it caused a recent break of structure, and there was an inducement sitting before the supply zone. So this supply zone is the new supply zone, and the other block is sitting at the supply zone. So this is the reason for this trade. More added confluence, draw your Fibonacci retracement to plot it from the highs to the lows. Plot it from the highs to the lows. Let me delete this. Plot it from the highs to the lows. Here was the point I'm told to sell from. What did the market do? The market rallied all the way, cleared out the inducement, stop loss above, TP all the way to the downside. So for you to know if an order block is literally very, very valid, the order block must have an inducement before it. And for you to know a certain zone, certain supply zone, or a certain order block, for you to know the particular point to take your trade off of, either an order block or a supply zone, your order block must be sitting at your supply zone. Please, if you want to write that down, your order block must be sitting at your supply zone. Your order block must be sitting at your supply zone. You can't have your supply zone here. For instance, let me show you guys something. You can't have your supply zone. Here's your supply zone. You can't have your supply zone here. This is your supply zone. You can't have your supply zone here. Then your order block, you say your order block is here. You are seeing another block here. Then you are waiting for price to rally all the way, mitigate on your order block. No, it doesn't work like that. You can't have your supply zone there and your other you can't have your supply zone above, then your other block far below your supply zone. It doesn't work. We trade off of supply and demand. Supply and demand are key levels where the market is most likely to reverse from. So you cannot have your supply zone at a level where the market is likely going to reverse from, then have your other block like beneath your supply zone, far away from your supply zone. No, your other block must be seated where your supply zone is or where your demand zone is. So this is one key factor in actually knowing how to trade order block. This is one key factor in actually knowing how to trade order block effectively. Your order block must be sitting at where your supply zone or where your demand zone is. So whatever you do, whatever analysis you make, whatever way you trade, probably you trade SMC, you trade supply and demand, or you trade the retail patterns and everything. If you are trading off of an order block, please, your order block must be sitting at a certain supply zone or a certain demand zone. If your order block is far away from your demand zone or your supply zone, that order block is not valid. If you are trading supply and demand, because we're looking to trade off of a certain supply zone or a certain demand zone. So wherever we're looking out for our order block, we want to look out for our order block at around our supply zone or our demand zone. I don't know if that makes sense. So for an order block to be valid, it must be sitting at around a certain supply zone or a certain demand zone. All of these things I'm actually saying is on the PDF, the ebook. You guys can go and read it. For another block to be valid, it must be sitting at around a certain supply zone or a certain demand zone. That's one. For an order block to be valid, it must have an inducement before the order block, before your supply zone. For another block to be valid, probably you want to trade off of another block, and you're most likely that this other block, this market is going to mitigate your other block, then start going to your direction. You must always want to look out for these things. Is your order block at a certain supply zone or a certain demand zone? Does your order block have an inducement before it? Because an inducement is actually a trap for impatient buyers or impatient sellers in the market. So the market will most likely create a trap, leave it there. Then when it goes to the initial direction, finally it comes back, it clears out that particular trap it created, kicking people stop losses and mitigates on the particular order block or supplies or demand zone. So for you to know that a particular order block is valid, it must be sitting at around a certain supply zone, a certain demand zone. It must have an inducement before it. The order block must have an inducement before it. Then three, does the order block break a recent structure? Does the order block cause a recent break of structure? If the order block didn't actually cause a recent break of structure, then that order block is not valid. Four, does the order block have like a liquidity sweep, probably a stop on buy side liquidity sweep or sell side liquidity sweep, however the case may be? So all of these things are what you should always put into consideration when choosing an order block. This particular order block, supply zone, caused a break of structure, caused an overall break of structure, has an inducement before it is sitting at a certain supply zone. There is no liquidity sweep that happened there. That's an added confluence. Order block mitigated on a previous order block, causing a recent break of structure, having an inducement, but there is no liquidity sweep. It is still good. Order block mitigated on another order block before, another order block that caused liquidity sweep, order block causing a break of overall low, overall structural low. So this order block is very, very valid. So all of these things, you need to put all of these things into consideration while choosing your order block, else you are going to fail big time. You don't just choose your order block from anywhere. You want to choose your order block from a certain supply zone or a certain demand zone. You want to choose your order block because your order block caused a recent break of structure. You don't want to choose that particular order block because it is sitting, it has an inducement before it, and you don't want to choose a certain order block because you are seeing a set, what's it called, a buy side stop on or a sell side liquidity sweep, however the case may be. So there are certain criteria in actually trading order blocks. You don't just go and because you see a massive candlestick, a large bearish candlestick that causes a massive push all the way to the outside, breaking the structure, breaking a breaking a recent structure, then you know that that particular order block is your order block to trade to take a trade off of. It doesn't work like that. There are certain rules to be put into place. There are certain perspectives you want to be you want to look out for before taking a particular trade off of another block. Yes, it works on any time frame. Whatever time frame you trade, it works for any time frame. The market is the same from the higher time frame. The market from the higher time frame is doing the same thing from the lower time frames. So I guess this is where we'll end today's section. We'll continue in the next class. But if you have any question, please just ask now. We have less than a minute. 20 seconds if you have any question. All right, so I guess you all understood. So in the absence of no question, if you have any question thereafter, you can actually send it to the group. But in the absence of no question now, we're going to end the section here, then we'll continue next week, Saturday. Please you all have a lovely weekend. Try and go out, go and spend that profit. If it's $10, $20, go and spend it on yourself, you're a trader. All right, see you guys in the next class.